What is impairment of non-financial assets? Impairment of non-financial assets refers to a situation where the value of certain assets owned by a company or organization decreases significantly. When an asset is impaired, it means that its current value is lower than its original cost or its expected future cash flows. To understand impairment, let's consider an example. Imagine you have a car that you bought for $20,000. Over time, the car gets older and starts experiencing mechanical problems. As a result, its market value decreases to $10,000. In this case, the car is impaired because its current value is less than its original cost. In the context of businesses, non-financial assets can include things like buildings, machinery, equipment, patents, or even goodwill, the value of a company's brand or reputation. If a company owns these assets and their value decreases significantly, it may need to recognize an impairment loss in its financial statements. Impairment of non-financial assets is important because it ensures that a company's financial statements reflect the true value of its assets. By recognizing impairments, companies can adjust their financial records to accurately reflect the reduced value of their assets, which is important for making informed business decisions and providing transparency to stakeholders like investors and creditors. When an impairment occurs, the company needs to estimate the amount of the impairment loss and record it as an expense on its income statement. In summary, impairment of non-financial assets happens when the value of certain assets owned by a company decreases significantly. It is important for companies to recognize impairments to accurately reflect the reduced value of their assets in their financial statements. Thank you for watching.